To order. I thank my colleagues for joining us today. We are here to talk about digital commodities and hear from a range of stakeholders on what this committee needs to do with respect to legislation. It's been reported that the current market cap for the digital asset market exceeds $3.5 trillion. Approximately 70% of digital assets are traded digital commodities, and roughly 55 million Americans own or use crypto. The U.S. currently lacks comprehensive federal regulation of the digital commodity markets, which means a significant percentage of Americans trade with crypto with very limited federal customer and market risk protections. This has been referred to as the digital commodity regulatory gap. While the regulatory gap hasn't stifled consumer interest in crypto, we know from past experiences what can happen when crypto intermediaries operate outside of a regulated framework. Without clear and comprehensive digital commodity market regulation, Americans' economic interests are at risk. The lack of comprehensive federal regulation in the U.S. has created significant regulatory uncertainty among innovators, developers, and market participants. Not knowing the rules of the road, U.S. businesses have moved overseas, leaving U.S. consumers vulnerable. This is why we must act on digital assets legislation to protect customers and ensure innovation and growth remain in the U.S. I've said it before, but we'll say it again. The CFTC, and only the CFT, should regulate the spot trading of digital commodities. The CFTC currently is enforcement authority over these markets. We should build upon that authority, not distribute it among different regulators. Let me be clear. Entities that list or facilitate the trading of digital commodities should not be exempted from CFTC regulation simply because they are registered with another federal agency. The U.S. financial capital markets stand as the deepest and most liquid in the world is largely a byproduct of the federal government's bifurcated approach to regulating those markets, with the SEC regulating the securities market and the CFTC regulating the commodity derivatives market. This longstanding American approach to financial market regulation was at the core of the Dodd-Frank Act's regulation of the swaps and security-based swaps market and should be the foundation upon which we build a comprehensive regulatory framework for digital assets markets. This is not to pit regulators against one another. It's the opposite. We draw inspiration from the agency's past regulation of the swaps market as we entrust the CFTC and the SEC with the authority to collaboratively regulate the digital asset markets. We must act expeditiously to develop a comprehensive regulatory framework for the trading of digital commodities, but we must ensure we get this right. We must also support our colleagues in the Banking Committee as they work on a regulatory framework for the trading of digital assets in securities transactions. As with the CFTC and the SEC, while there are clear lines of jurisdictions between our committees, we are committed to working collaboratively on a comprehensive bill for the digital asset marketplace. I, alongside Ranking Member Klobuchar and all members of the committee, will work in a transparent and bipartisan manner to develop this regulatory framework. This task requires hearing from everyone who wants to be heard and for all committee members to work together to create a framework that allows for liquid and resilient spot digital commodity markets, strong retail protections, and rules that give American businesses confidence to continue to innovate and grow in the United States. Today, we'll hear from former CFTC chairman, the head of the Derivative Self-Regulatory Organization, and the head of an association representing a diverse group of crypto stakeholders. I look forward to hearing their thoughts as we contemplate legislation. And with that, I now turn to our ranking member, Senator Klobuchar, for her opening statement.
Well, thank you so much, Chairman, and thank you to all our witnesses for being here today. Over the past decade and a half, as the Chairman just noted, we have seen the increasing use of and investment in digital commodities like Bitcoin. What was once a niche market for early adopters and cryptography enthusiasts is now a swiftly growing market that is increasingly interconnected with traditional financial markets and institutions. When we met in July of last year, I noted that the market capitalization of digital assets was over $2 trillion. It is now more than $3 trillion. The price of Bitcoin then was $73,000. It is now more than $100,000. And yet, oversight and regulation of this market has not evolved to keep up with the growth. The Commodity Futures Trading Commission has long played a vital role in ensuring the integrity of our financial and agricultural derivative markets. That includes protecting market participants from fraud and manipulation, maintaining orderly markets, and enabling farmers, ranchers, manufacturers, and small businesses to hedge against risk. And we're honored to have two former chairs here with us today. As early as 2015, the CFTC determined that digital assets could be commodities and found that Bitcoin, the largest such asset, was a commodity. Derivatives on Bitcoin and other digital commodities have been listed on CFTC-regulated exchanges, and the CFTC has full regulatory authority over these products. But it is only anti-fraud and anti-manipulation authority over the underlying spot markets, a regulatory gap that has resulted in untold losses to customers and the increasing risk of contagion to traditional financial markets as digital commodity markets grow in size and are integrated into the existing financial system. If Congress gives the CFTC the authority and the resources to step in and oversee these spot markets, it would be well positioned to do so given its existing role. And that role is overseeing the digital commodity derivative markets and the enforcement authority it has exercised over the underlying spot markets. Providing regulatory certainty and oversight to these markets can encourage responsible innovation and the adoption of new technologies. At the same time, we have to ensure a level regulatory playing field so that crypto market participants are subject to standards as rigorous as those applied to traditional financial institutions. If Congress is to do this, it must do so without compromising on crucial customer protections, with safeguards to prevent illicit finance and with provisions to address market integrity concerns. It also means putting in place guardrails to address conflicts of interest in the digital assets sector, preventing exchanges and issuers from using their position to favor affiliated actors or exploit customers. And if Congress is going to establish a new financial regulatory framework, it must strengthen our system, not weaken it, by putting safeguards in place to prevent corruption or self-dealing by federal officials, including those in positions of power who might sponsor, issue, or profit from digital tokens. I look forward to hearing from our witnesses on how they believe regulation of digital commodities spot market can responsibly encourage innovation while ensuring our financial markets continue to be the safest in the world for market participants. This is a big job we have, but I look forward to hearing your testimony and working with you. Thank you.
Thank you. We will now introduce our panel of witnesses. I'm pleased to introduce Mr. G. Kim. Mr. Kim currently serves as President and Acting Chief Executive Officer of the Crypto Council for Innovation. Mr. Kim has served as over 15 years of experience in the digital asset sector, and before being named CEO, served as Chief Legal and Policy Officer for CCI. Mr. Kim, thank you very much for being here today. I think Senator Klobuchar is going to introduce Russ.
Thank you very much. We're pleased to welcome back Russ Behnam. Many of you know him from his years of service on the committee staff and most recently as both Commissioner and Chairman of the CFTC. Mr. Behnam is a distinguished fellow at the Psaros Center for Financial Markets and Policy at Georgetown University's McDonough School of Business. From 21 to 25, he served as chairman of the CFTC, following his service as a commissioner. Before joining the commission, he was senior counsel on this committee to then chairwoman Debbie Stabenow. During his tenure at the CFTC, Mr. Behnam oversaw the significant expansion of digital commodity derivative markets and led the agency's enforcement activity in spot markets for digital assets. We welcome you back to the committee.
And Mr. Massad.
We are also pleased to welcome back Timothy Massad. Mr. Massad is a research fellow at the Mossavar-Rahmani Center for Business and Government at the Harvard Kennedy School of Government, where he directs the center's digital assets policy project. From 2014 to 2017, he served as chairman of the CFTC. During his tenure, he oversaw the implementation of Dodd-Frank reforms in the over-the-counter swaps market, worked to harmonize cross-border regulation, and led the CFTC in becoming the first U.S. regulator to take action on cryptocurrencies. Previously, he served as Assistant Secretary for Financial Stability at the U.S. Treasury Department, and that was from 2010 to 2014. Mr. Massad, welcome back to the committee. I'm sure you remember many happy moments here before this committee. Thank you for your testimony.
And I'm happy to introduce Mr. Tom Sexton. Mr. Sexton is the President and Chief Executive Officer of National Futures Association, the self-regulatory organization for the U.S. derivatives market. Mr. Sexton joined NFA in 1991 and is on the Commodities Futures Trading Commission Global Markets Advisory Committee and is a board member of Futures Fundamentals. Mr. Sexton, thanks you again very much for being here. I'd also like to introduce the Honorable Walt Lukken, former acting chairman and commissioner of the U.S. Commodities Futures Trading Commission from 2002 through 2010. Mr. Lukken currently serves as the President and Chief Executive Officer of Futures Industry Association, a position he has held since 2012. Prior to his time at the CFTC, he served as counsel for this committee under Chairman Lugar. Welcome back, Mr. Lukken, and thank you for being here. Again, we appreciate all of you being here. This really is a who's who of the industry, and we're very anxious to hear from you. So let's start out with you, Mr. Kim.
Thank you, Chairman Bozeman, Ranking Member Klobuchar, and members of the committee for the opportunity to testify today on how best to strengthen United States leadership in digital asset innovation. I believe this can best be accomplished through comprehensive federal oversight of digital commodities. I'm pleased to represent the Crypto Council for Innovation, a global alliance of industry leaders across the digital asset space. I respectfully submit that it is critical for Congress, following this committee's leadership, to urgently pass legislation providing the CFTC with oversight over the trading of digital commodities. This will provide necessary regulatory clarity and certainty, protect consumers, and ensure continued U.S. leadership over digital assets. For years, the digital asset industry has requested clear rules of the road and a coherent federal framework to operate within the U.S. Such a framework, which is in the national interest, will benefit users and consumers, foster industry growth, and strengthen U.S. markets by preventing fragmentation and regulatory ambiguity. Now is the time for Congress to act to secure this future. Today, roughly 28% of American adults, about 65 million Americans, own digital assets. The reasons and benefits are many. Individuals and businesses use them to make transactions more efficient. Humanitarian groups use them to deliver aid in high-risk regions, setting their speed, transparency, and reliability. And decentralized finance is expanding access to economic services. Beyond payments, tokenization of real-world assets, securities, real estate, and even agricultural commodities has the potential to make markets more liquid, accessible, and inclusive. Given the many benefits and expanding real-world applications of digital assets, we commend this committee for pursuing a legislative framework to guide further development. From a consumer protection standpoint, clear federal supervision of market activity is essential. The industry is committed to building necessary guardrails so that consumers can participate in marketplaces that are fair and secure. With that backdrop, a significant portion of the digital asset ecosystem, including widely used assets such as Bitcoin and Ether, function like commodities rather than traditional securities. These assets are not issued by centralized entities to raise capital and lack profit-sharing rights. In fact, courts and regulators, including the CFTC, have affirmed that such assets fall under the Commodity Exchange Act, depending on their structure and use. Most digital asset trading volume occurs in secondary markets, where participants treat these assets as store of value, not as equity stakes. Recognizing the commodity-like nature of these assets is essential to crafting a regulatory framework. A comprehensive framework can provide essential consumer protections, including business conduct standards, disclosures, segregation of customer funds, minimum capital requirements, trade surveillance, and more. Digital asset firms in the US are already subject to AML compliance, sanction screening, and suspicious activity reporting. And these requirements should be confirmed and codified in any new comprehensive framework. In addition to its oversight of the digital asset derivatives market, the CFTC already has enforcement authority over spot commodity markets, but this must be matched by a broader federal framework that addresses how Americans use digital assets today. The CFTC is well situated to play a central role in overseeing the spot digital asset commodity market. It is a principles-based regulator with a mandate to deter price manipulation, ensure financial integrity, protect market participants, and promote responsible innovation. The agency has extensive experience in supervising large and complex markets and maintains a robust enforcement capability. The US is in a global race for leadership in digital asset innovation. It is a true race to the top. We have seen other jurisdictions, including the EU, the UK, Japan, and Singapore, recognizing the importance of this technology by actively engaging with industry to consider and implement tailored regulatory regimes. While many of the best minds, technology, and resources still exist in the US, we can further establish US leadership by way of a comprehensive legislative framework. Indeed, legislation is the most effective way to ensure long-term stability and guard against future policy volatility that may otherwise repeatedly shift the goalpost. This important work, squarely within the domain of this institution, Congress, and this committee, will unleash powerful potential, enhance clarity, ensure consistency, and best protect consumers. Thank you again, and look forward to answering your questions.
Thank you, Mr. Behnam.
Chairman Bozeman, Ranking Member Klobuchar, members of the committee, thank you for the opportunity to testify before you today on this important topic. Between 2017 and 2025, I served first as CFTC Commissioner, then Chairman. During that more than 7-year period, I observed the significant growth of the digital asset market. While I served at the CFTC, the digital asset market endured multiple periods of dramatic volatility. Throughout this time, I publicly stated one consistent message to Congress. Under U.S. current law, there is a gap in regulation for the digital commodity asset market. The regulatory gap remains today and must be filled with targeted legislation. It has facilitated countless scandals and fraudulent activity, some very small and typical in criminal form, others massive in profile. First and foremost, filling the regulatory gap will provide the needed customer protections that American investors have become accustomed to in traditional financial markets regulated by the CFTC and the SEC. Further, I do not believe public interest for digital assets will wane. Inaction will only result in greater risk to our financial markets and investors through lack of market transparency, fraud, market manipulation, corruption, and conflicts of interest. One common refrain in connection with past legislative efforts to fill the digital commodity gap suggests that a U.S. regulatory framework will legitimize the digital asset market, creating regulatory loopholes. I believe this argument is the loophole. It has only left, for far too long, the vast majority of the digital asset market unregulated and American investors vulnerable. I believe the CFTC is the appropriate regulator to oversee the digital commodity asset market because of its expertise regulating commodity markets, including digital asset derivatives since 2017, and its enforcement experience in the underlying digital commodity market. Unique characteristics of digital asset trading, including decentralized finance, custody, and market structure, demand specific focus to ensure broader policy outcomes. And all investors deserve access to material information about a financial asset to ensure an informed decision. Market structure in traditional finance has evolved over many decades. I urge the committee to carefully examine how current unregulated digital asset market structure differs from traditional market structure and consider where there may be opportunities for change and where existing market structure requirements should be preserved. The CFTC has a long-standing and productive partnership with the SEC. In a situation where a regulated digital asset market participant handles both security and non-security tokens in the underlying market, separate and exclusive jurisdiction for each agency is critical. Any regulatory system that includes deference or exempted authority will be an incomplete effort. Further, any framework where each agency does not retain its exclusive licensing authority pretends a future of blurred jurisdiction across digital assets and possibly physical commodities. The CFTC's principles-based oversight model has served its regulated markets well, striking an appropriate balance between clear outcomes-based requirements and measured flexibility to meet those outcomes. In light of the novel nature of digital assets, market regulators, consistent with a legislative mandate, could tailor rules to meet the risk and profile, leaving flexibility to adapt with a changing market landscape as the digital market itself evolves. Second, regulations are only as strong as the agency and personnel that enforce them. Appropriate funding is necessary to meet the mandate of any regulatory program. Third, a reliable self-regulatory organization has been critical to the success of the CFTC. The National Futures Association has served as an effective partner for the CFTC for more than 5 decades. An effective legislative effort must include a role for the NFA. Fourth, it's essential that legislation provide comprehensive authority for anti-money laundering, know your customer, and customer identification program. And finally, given the broad adoption of digital assets by the American population, a comprehensive education and outreach program is critical as well. Domestically, federal law enforcement relies heavily on state and local partners to identify and combat civil and criminal misconduct, which often targets society's most vulnerable. I encourage this committee to ensure state and local law enforcement remain a key partner. The principles and regulatory foundations that make U.S. capital markets and derivatives markets the deepest, most liquid, and most resilient in the world provide an effective model for digital asset market structure. We need to act thoughtfully but with urgency to fill this gap. I am supportive of recent steps the U.S. House Committee on Agriculture and Financial Services have taken in a bipartisan manner to fill this gap. That said, there is more work to be done to ensure congressional market structure legislation is comprehensive, does not undermine existing law, and addresses the unique characteristics of the ecosystem. Today's hearing is a critical step to achieve that goal. I thank the chairman, ranking member, and members of the committee for your focus in this area and look forward to answering your questions.
Thank you. Mr. Massad.
Thank you. Mr. Chairman, Ranking Member Klobuchar, members of the committee and staff, thank you for inviting me to testify. The views I express are my own and do not represent the views of the Kennedy School of Government. I hope this hearing gives us an opportunity to rethink how we should regulate digital assets. The Clarity Act, like many earlier proposals, has the right goals: address the regulatory gap, provide clarity, but the wrong approach. We need to keep in mind a few basic facts. First, this is a technology. It is not an asset class. It will be used in many ways, and the most valuable use cases may be tokenizing securities. Second, we cannot define whether something in digital form is a security, a commodity, or neither with a few paragraphs in a statute. Appropriate regulation depends on what the token represents, whether there is an issuer, whether capital is being raised, and other factors. And the technology is evolving rapidly. Therefore, we should not lock in definitions that will fail to bring clarity, nor should we tie regulators' hands. Third, a principal reason for the lack of clarity is our fragmented regulatory system. We have 2 market regulators, neither of whom has jurisdiction to regulate the spot market for digital assets that are not securities. I believe the solution should bring the agencies closer together. Finally, we are in a different place than the last few years. The primary regulatory response to date, court cases that sought to interpret the Howey test, was not sufficient. But the SEC has already abandoned regulation by enforcement and is actively working to provide necessary guidance. Congress should not fight the last war. All of these factors argue for a different approach, one that establishes regulation over the spot market without rewriting the securities laws, and one that mandates the SEC and CFTC work together, not just on a few rules, but overall, because both agencies have significant stakes and expertise in these matters. Regulation of the spot market needs to draw on the expertise of both agencies. Classification issues can best be addressed by the agencies working together to implement general principles, not prescriptive rules provided by Congress. And customization of rules to make sure they work for digital technology in record keeping, custody, clearance, and settlement or otherwise must be as consistent as possible between the agencies. Former SEC Chair Jay Clayton, who was appointed by President Trump, and I proposed essentially this approach 2 years ago. We said Congress should mandate that the SEC and CFTC work together to develop joint rules that would apply to every intermediary that trades or handles Bitcoin or ETH. That approach establishes jurisdiction over the market without, as we said, quote, debating classification of each token or Congress pursuing tortured rewriting of existing definitions of securities and commodities. We added that rewriting existing law might fail to bring clarity and inadvertently undermine decades of regulation and jurisprudence as they apply to traditional markets. Unfortunately, the Clarity Act does the things we warned against. It won't provide clarity, but it will undermine regulation. Let me briefly note a few of its weaknesses. It addresses classification with a tortured definition that rewrites existing law. It provides exemptions from securities laws, such as for raising funds if one has the intent to build a mature blockchain system, that are unnecessary and will be misused. It creates a broad exemption for decentralized finance activities, which will lead to migration of regulated activity into an unregulated sphere. Indeed, a large intermediary like Robinhood or Goldman Sachs could operate a software protocol for the trading of tokenized securities that would then be exempt from the Securities Exchange Act. It will not require crypto trading platforms to own the digital assets their customers purchase, and it will permit them to engage in their own proprietary trading and have other conflicts of interest. And finally, it will provide many opportunities for smart lawyers to find ways to manipulate its provisions to achieve lesser compliance burdens for their clients. I was a corporate lawyer for 25 years with one of the best firms in the world, and I know how that works. We can and must do better, and I describe how in my written testimony. Finally, I just wish to agree with and underscore the ranking member's comments about the importance of addressing the activities of government officials in this sector. Thank you again for inviting me. I look forward to your questions.
Thank you. Mr. Sexton.
Good afternoon, Chairman Bozeman, Ranking Member Klobuchar, and members of the committee. Thank you for the opportunity to testify at this important hearing to explore a legislative framework for the federal oversight of digital commodities. Over 50 years ago, Congress enabled the creation of a Registered Futures Association, or RFA, to support the CFTC's oversight of the commodity futures markets. NFA is the industry-wide independent self-regulatory organization for the derivatives industry and is an RFA. NFA is solely a regulatory body. We do not operate a market, and we are not an industry trade association. NFA's and the CFTC's over 40-year public-private partnership overseeing the derivatives industry has been a tremendous success, and we recognize the CFTC's commitment and significant efforts in promoting the integrity, resilience, and vibrancy of the derivatives markets. Today, I would like to address three main points that may be helpful as this committee continues to work on market structure legislation for the federal oversight of digital commodities. The first point is to introduce NFA and its critical role in protecting customers and ensuring the integrity of the derivatives markets. NFA has a clearly defined mission: safeguard the integrity of the derivatives markets, protect investors, and ensure that NFA members meet their regulatory responsibilities. We optimize the self in self-regulation. Our board is primarily composed of representatives from NFA member firms, and we leverage industry expertise in every aspect of our work. Our activities are closely overseen by the CFTC. The CFTC provides frontline regulatory oversight of exchanges, clearinghouses, and swap execution facilities. NFA provides frontline oversight of our global membership of CFTC-registered market participants, including FCMs, swap dealers, IBs, RFEDs, CPOs, and CTAs. NFA's primary responsibilities include registering all firms and professionals on behalf of the CFTC, developing rules for fair dealing with customers and counterparties, monitoring members' compliance with those rules, taking enforcement actions when members violate those rules, offering an arbitration forum to resolve customer disputes, and providing investor protection and educational resources. The second point is to discuss some key principles for the effective oversight of digital commodities. NFA firmly believes that the CFTC is well equipped to take on the oversight of digital commodities given its core principles regulatory approach, experience over the years integrating new asset classes into its oversight framework, and its current experience gained from having anti-fraud jurisdiction over spot digital commodities and supervisory oversight of related derivatives products, including Bitcoin and Ether futures. In establishing a federal oversight framework, we recommend the committee focus on the following. Number one, clear lines of jurisdiction. We recommend that Congress provide the CFTC with exclusive authority over digital commodities and the SEC with authority over digital securities. We should avoid a framework in which jurisdictional lines become blurred and we have two market regulators writing rules for the same activity. This will be confusing for market participants, create blind spots in the oversight of this market, and lead to regulatory arbitrage. Number two, strong customer protections. We advise Congress to look to the time-tested, robust customer protections that have served the derivatives industry extremely well, which include customer fund safeguards, customer disclosures, business conduct standards, and anti-money laundering protections. And number three, flexibility to keep pace with innovation. We encourage Congress to rely upon the CFTC's significant experience with innovative products and retain its core principles regulatory approach. The third and last point is to underscore that self-regulation provides many benefits to customers and the industry. As the derivatives markets have evolved over the years, Congress and the CFTC have entrusted NFA with additional responsibilities. Our coordination with the CFTC has resulted in a strong track record of protecting retail customers and prosecuting retail trading abuses and fraud. Today, customer complaints and single-event customer arbitrations filed at NFA, as well as the CFTC's reparation cases, remain at all-time lows. Importantly, NFA is adaptive and proactive. We currently have numerous NFA member firms engaged in spot digital commodity activities. To enhance oversight of these firms, we adopted a rule in early 2023 that imposes anti-fraud, just and equitable principles of trade, and supervision requirements on them. 50 years ago, Congress had the wisdom to establish a public-private oversight framework, which the CFTC and NFA have effectuated to form a strong oversight partnership. We strongly recommend that Congress, in any market structure legislation, retain a significant role for an RFA to partner with the CFTC. Thank you again, and I'm happy to take any questions.
Thank you. Mr. Lukken.
Chairman Bozeman, Ranking Member Klobuchar, and members of the committee, I appreciate this opportunity to testify. I'm President and CEO of the Futures Industry Association, which represents the futures, options, and cleared derivatives markets globally. As was mentioned, I had the honor of working for this committee during the passage of the Commodity Futures Modernization Act of 2000 and was able to go on to serve as commissioner and acting chair of the agency for 7 years, which included leading the agency during the financial crisis of 2008. The digital asset industry and importantly, its customers deserve a proper regulatory framework that will keep these markets safe, innovating, and growing. The U.S. has two strong market regulators in the CFTC and the SEC. Collectively, they can bring digital commodities and digital securities into a proper regulatory framework. Given my background, I want to share my views on the Commodity Exchange Act and the CFTC and why this agency is well suited for the oversight of digital commodities. The CFTC's regulatory framework has 5 strengths worth highlighting. The first involves the agency's principles-based regulation, which ensures the CFTC can keep pace with technological changes and advancements in market dynamics. This will be key for the evolving digital commodity markets. The second strength is the agency's support of innovation. The CEA explicitly and uniquely requires the CFTC to promote responsible innovation in fulfilling its duties. The agency has done this for 50 years, allowing innovative new asset classes to be listed, including futures on cryptocurrencies 8 years ago. Today, more than 60 cryptocurrency futures and options trade on 7 CFTC-registered exchanges. A third strength is the agency's customer protections, which have safeguarded investors for years. These require futures commission merchants, or FCMs, to segregate and confirm customer balances every day. FCMs, those intermediaries who serve as agents for their customers, also provide a guarantee against customer shortfalls. And FCMs contribute to a break-the-glass default fund at every clearinghouse, should a single clearing member not be able to cover losses. This FCM model of protections has provided critical resilience and risk management over the years. A fourth strength is enforcement. Strong enforcement in combination with robust customer protections has shown to be a powerful 1-2 punch for the agency. The CFTC has aggressively used this enforcement authority, from LIBOR to retail Forex to energy market manipulation, to bring actions against those who seek to swindle investors or manipulate prices. The last item I'll mention is the CFTC's approach to cross-border trading, given the global nature of traditional commodities as well as digital assets. The CFTC's cross-border recognition framework, which it pioneered in the 1990s, strikes the right balance of protecting U.S. participants while providing access to markets globally. These 5 strengths will enable the CFTC to take on increased responsibilities in digital commodities and provide these innovative markets with a sound regulatory framework. I also want to highlight a couple of other key stakeholder recommendations for your consideration. The first involves recognizing the risk-reducing positions of customers for margin and capital. Farmers and other end users utilize our markets to hedge the price risk of assets, whether it's corn, oil, or financial products. When these offsetting products are regulated by different agencies, customers may be forced to pay double margins because of a lack of recognition of these offsetting trades. FIA supports statutory language that instructs the CFTC and SEC to allow for cross-margining between offsetting positions in these respective markets. FIA also supports legislative language that instructs prudential regulators to recognize these offsetting risk positions through cross-product netting. These 2 actions will free up capacity for these growing markets and incentivize strong risk management. The last item I'll mention relates to the need for clear rules around managing conflicts of interest. We support legislative language that requires the CFTC to conduct a rulemaking on managing conflicts of interest when entities combine exchanges, clearinghouses, FCMs, and trading arms all within the same legal structure. We believe the development of consistent rules around conflicts will ensure customers can utilize innovative new structures without facing differing customer protections due to market structure design. Again, thank you for the opportunity to testify, and I look forward to your questions.
Thank you. Let's go ahead and start with our questions. Mr. Behnam, Mr. Lukken, as former CFTC chairman, can you describe why you believe the CFTC and only the CFTC is the right regulator for spot digital commodity trading? And can you also speak to concerns with allowing entities to list or facilitate trading in digital commodities without having to fully register with the CFTC?
Thanks, Mr. Chairman. I would say the number one thing, and there's a few reasons why I've stated this in the past, you and I have had this conversation. I'll start first with the experience, and this goes back to Chairman Massad's time in the mid-2010s when we had a determination of Bitcoin as a commodity, and you started to see enforcement actions coming out of the CFTC around digital assets. That's a long time ago, and over that 10-year period, the CFTC has been at the forefront of enforcement, both on the fraud and manipulation side of crypto. enforcement doesn't just mean an enforcement action. There are staff within the agency that are conducting research. They're doing surveillance of both the derivatives markets and the underlying physical market itself. So the agency has developed over this course of time a really distinct and unique expertise in the digital asset market. Second thing I'll say is the expertise in the commodity market. The CFTC is over 100 years old. The CFTC as an independent agency is 50 years old, and it understands commodity markets. And these are very distinguishable from securities markets, the way the markets are structured and the regulation over them. And lastly, I'll say it is extremely important the CFTC become the primary regulator of any commodity asset. As you've noted, 2 market regulators. It's important we have 2 market regulators because they are independently very large, unique markets that demand different sets of regulation. I believe if there's any agency that starts to regulate commodity tokens, it becomes and potentially creates a blurred line of what is jurisdiction between the CFTC, commodity markets, potentially physical commodities themselves, and other regulators.
Very good. Mr. Lukken.
I would echo my colleague. I think really 3 strengths that really give the CFTC unique ability to oversee the commodity derivative or digital commodity markets. As Russ mentioned, expertise. I mean, the agency for 50 years has been developing the ability to look at secondary markets for commodities, and that expertise, whether it's surveillance, manipulation of those markets, and how best to ensure that those markets are not taken advantage by those trying to manipulate prices. And regarding cryptocurrencies, as was mentioned, the CFTC already has experience in this. We're regulating 60 products currently, futures on those derivatives, and all that goes with it from all the core principles that go with that regulatory expertise. So they already have experience in the derivatives, the digital commodity space. The second is in their mission in Section 3 of the Commodity Exchange Act. It's unique in that it says that we should be promoting responsible innovation as an agency. That is something that Congress had the wisdom to put in 1974. That allows these products, as they get listed, for them to be thinking about ways that we can promote these new innovative technologies that are coming in. I think that's an important top-down mission of the agencies. They're going to help these products evolve and develop. And then lastly is just flexibility. The agency has principles-based regulation, as I mentioned, but other parts of the Act foresee authority that allows it to carve out certain things that may not justly be in their jurisdiction, exemptive authority. So I think the CFTC has the tools to exclusively oversee these markets, but also with some flexibility that will allow these markets to evolve.
Very good. Mr. Kim, can you talk about the importance of avoiding applying centralized intermediary regulatory requirements to decentralized software and technology?
Thank you very much, Mr. Chairman. This is a very important question. Decentralized finance in its purest form allows individuals to transact with one another peer-to-peer by the use of software and code without reliance on centralized intermediaries. Notably, the software and code does not take control or custody of the funds. Of course, we regulate exchanges, not the matching engine. We regulate brokers, not the trading screens. And we regulate the centralized intermediaries, which take control and custody of the funds, Mr. Chairman. It's important to keep that in mind as we look to establish a comprehensive framework for the United States to keep innovation here in the U.S. Very briefly, Mr. Chairman, of course, as Congress has been contemplating a broader market structure framework, the focus has been on centralized intermediaries that do take control or custody of funds. Right now, as my colleagues have mentioned, there is a regulatory gap. There is no federal framework for the supervision of digital commodities. That means there's no business conduct standards, no conflicts of interest provisions, no consumer education. And it's important, in order for us to cement U.S. leadership and best protect consumers, that we address this gap by providing the CFTC with supervision, Mr. Chairman.
Very good. Senator Klobuchar.
Thank you very much, Mr. Chair. I'll start with you, Mr. Massad. You talked about the CFTC having a role and a clear one with regulating digital assets. And then you also talked about how you and the former Trump chair have suggested doing something where the SEC does some of it and the CFTC does some of it. Mr. Sexton raised this issue that he's concerned, I don't want to put words in your mouth, right? But that there would be vagary or two, that are regulating the same thing. Could you talk about how you think this could work in today's environment in terms of making those kinds of suggestions or including that in legislation? Because I found that interesting.
Certainly. The first thing is that Mr. Clayton and I were suggesting that if we were trying to establish jurisdiction over this spot market without rewriting securities laws, without rewriting the definition of security, that's why we argued for joint rules. Secondly, this is a different market, and I think we have to recognize that. It's much more retail than what the CFTC has regulated in the past. And I have great respect for the agency's abilities and expertise, but we need to keep that in mind. We also need to keep in mind that this will be an exception, a very big exception, in that the CFTC does not regulate other spot markets, and we don't want that exception to grow. I wouldn't want to see other constituencies come and say, well, why shouldn't the CFTC regulate this spot market? And finally, it's an unusual technology in that you are going to have things that start out as securities and then become commodities. That's the reason why they have to work together. So how would it work? It would involve some joint rulemaking. It would certainly involve one of the agencies taking the lead, and I think in terms of implementing rules, enforcing rules, that could certainly be the CFTC with respect to this digital commodity spot market. I think it should also involve an SRO, a self-regulatory organization. I have great respect for the work of the NFA. I think that could be jointly supervised, as the Lummis-Gillibrand proposal advocated. So I think it would be a combination of joint rulemaking, perhaps a joint SRO. You could even have common commissioners, and I realize that would be a big step. I haven't advocated merger. I'm not advocating merger. But I think this is an unusual situation that we're in, and this is a technology that is going to have multiple uses, and it's necessary that we approach it in a way that we have consistency across the board.
Okay, thank you. Mr. Behnam, Mr. Massad just talked about that concern on the retail and how uniquely retail this is in terms of all the people that have purchased this and it's part of their savings. What specific approaches would you recommend to ensure that innovation in crypto does not come at the expense of basic safeguards and customer protections for the public? Would there be specific marketing, disclosure rules? What would you see?
Thanks, Senator. I think it's important to note, and I've said this many times, probably before the committee, yes, in fact, Chairman Massad, I agree with him. A lot of the market is retail-oriented, unlike the typical CFTC market, which is more institutionally oriented. But we have to look really at the asset itself as opposed to the constituency that's investing. Commodities versus securities are regulated in very different ways. Securities are regulated in a way to bridge information gaps between an issuer of security and an investor, because you have centralized individuals and audited financial statements that need to be disclosed to investors. That is not the case with commodities. So I don't think you're going to need to build, and quite frankly, I don't think you can build an investor disclosure regime at the CFTC like you have one at the SEC, because you can't simply disclose something about Bitcoin that you can about a share of a stock. Second, I advocated this, I said this in my written testimony, yes, the CFTC will absolutely need to increase its ability to get information out about the risk of loss associated with investing in digital assets. The CFTC has a very well built out customer education program, but I believe the committee should think about investing in that program to further develop
Thank you. And I'll get more from you personally, so thank you for your ideas. Just one last question, Mr. Massad. In considering any legislation to regulate these digital markets, we can't ignore the numerous ways that President Trump has sought to profit from digital assets and influence. His Trump meme coin offers a non-transparent backdoor for those seeking presidential favors or attention, including the recent crypto dinner he sponsored. That put money directly in his pocket. His World Liberty Financial issued stablecoin, USD1, only recently entered the market, but it has already skyrocketed to be one of the top 5 stablecoins. What effect do these activities have on the crypto industry and on efforts to regulate it? And as you and I seem to agree in my opening and your comments, that this has to be part of any regulation.
I think it's a black eye for the industry, and I know a number of people in the industry that have expressed that but are afraid to speak out. And I think it gives the wrong impression of what this sector is about, and that's why it's so important to address it through rules on conflicts, divestment, and so forth. And I hope also I can come back on the disclosure point later.
Okay, well, I'm sure I'll have a second round, or someone else.
Thank you.
One of my colleagues will ask you. Thank you.
Thank you.
Senator Marshall.
Thank you, Mr. Chairman. It's great to see everybody. Mr. Behnam, welcome back. You look great, so life must be treating you well. I'll give you my first question. The crypto industry seems to use a lot of synonyms. And you know, since the first time we met, I've been concerned about anti-money laundering and know your customer rules, that the crypto industry be held to the same standard as banks. How can we stop these black markets from happening and using this type of activity? How should we handle potential deficiencies moving forward to address these issues?
Thanks, Senator. It's great to see you as well. I do think, and as I've said in my written testimony, as you and I have discussed over many years at this point, whatever efforts the committee makes around anti-money laundering and know your customer should be grounded in existing law, around both of those things that Treasury mostly implements, but the agencies will need to also have increased authority around anti-money laundering and know your customer. Much of this industry is about anonymity. And I think why we're here today is to bring that anonymity into light, to bring transparency around it, and regulation serves that purpose. Comprehensive regulation around the entities, the intermediaries, will provide the tools that Congress needs and the law enforcement agencies to prevent anti-money laundering and know your customer issues that unfortunately support a lot of the illicit activity, potentially terrorist activity, terrorist financing, that I know has been a big issue that you've addressed, but something that has to be addressed very specifically in any legislation.
So certainly, in your estimation, this remains a little concern, it's a big concern. How concerned?
I think this is a primary concern that needs to be top of mind for all of you as you consider legislation, but I don't think it is reinventing the wheel. I think a lot of the AML KYC law that has been developed over time is a good framework to build off of for this industry.
Okay, Mr. Kim, I'll come to you next. It's kind of the same basic question. What specific guardrails could be implemented to make sure that crypto markets aren't a haven for bad actors who want to use crypto for money laundering and financing terrorism?
Thank you for your question, Senator. Countering illicit finance is extremely important for the industry. No amount of illicit finance is acceptable in any industry or technology, including digital assets. As my colleague, Mr. Behnam, mentioned, FinCEN, starting from 2013, has required digital asset exchanges to have SARS reporting, AML compliance, sanction screening. And I believe that providing the CFTC with oversight over the spot trading of digital commodities and allowing the CFTC to come up with additional necessary rules and guardrails to best protect the industry is something that would benefit industry, consumers, and that will allow innovation to grow here in the United States, because the only way for our industry to keep on growing is to best protect consumers.
Okay, all right. Thank you, Mr. Chairman. I yield back.
Senator Smith.
Thank you, Mr. Chair, Ranking Member, and welcome to the committee, everyone. So I come at this from the basic perspective that people should be able to invest their money in any way that they choose, and they ought to also be able to count on free markets and markets that work well, because there's a regulatory structure in place that protects them from unfair and rigged environments. So I'm going to just start with you, Mr. Massad, because I could tell you wanted to follow up on this issue of sort of CFTC versus SEC. I don't think it should be a versus or an either or. I do believe that there is an important role for both agencies, and also our job here should be figuring out how to fill the gaps that exist when it comes to regulation regarding crypto assets. But would you just follow up about this issue of disclosure
Yes.
that was raised?
Thank you, Senator. I agree with Mr. Behnam that generally on commodities, we don't worry about a disclosure framework in the context of commodity futures. We just worry about whether the contract is susceptible to manipulation. But this is different. It will be different. If you look at the Clarity Act, if you look at Lummis-Gillibrand, if you look at any of these proposals, they provide for disclosure regarding so-called digital commodities. And so we will have to build out some kind of disclosure framework. And again, I'm fine with the CFTC being the lead authority on overseeing these markets, ideally with the work of an SRO. But I think the development of the rules is going to require cooperation.
Thank you. I appreciate that. That's helpful. And we don't have legislation here in the Senate. As you know, we have the Clarity Act, which the House will be taking up as soon as this week. So I want to dive into some of the issues on the Clarity Act. And we just had a chance to speak about this last week in the Banking Committee as well. So here's the first thing. So securities brokers are required to get their customers the best possible trade, right? They have to look across multiple exchanges, but this isn't happening for crypto trading right now. And at best, the law is unclear, as I'm understanding that. Would you agree with that? And would the Clarity Act do anything to address that issue?
No, I do agree with your point, and no, it would not. And again, I think Americans, think that our financial markets are well regulated, because they are with respect to securities and commodities, but this one is different. There is no best execution obligation. There is no prevention of conflicts of interest on the part of brokers or crypto exchanges.
And is there any reason that a crypto broker couldn't or shouldn't be required to execute trades in the best interest of their customers? Is there anything that's intrinsic in the technology or anything that would make that not reasonable?
Not to my knowledge, Senator.
Okay. It seems to me, I would agree with you, that customers deserve to know that when they're buying or selling an asset, that their broker is trying to get them the best possible execution on their trade and not somehow profiting without them knowing about it. And I think this is a place, colleagues, where we could look at how to improve the Clarity Act as we go forward. I want to ask you a bit about tokenized stocks, which I think is another very challenging issue. So the trading platform Robinhood recently announced that it was going to start offering tokenized stocks to European investors, I believe. So these aren't actual shares in a company, but they're digital assets that, at least in theory, derive their value from the real thing, the real stock. They don't provide any ownership stake in the company, but they or any rights that would come with owning, being a shareholder, for example. So, Mr. Massad, proponents of these tokens claim that they would expand investment opportunities for folks, but I don't know that that really tells the full story. I mean, could you just address what risks these tokenized stocks would pose to investors and to the broader market?
Yes, Senator. I think it will be a situation where there could be a lot of confusion and a failure to protect investors. It won't be clear exactly what this tokenized thing is. Does it pass through all the rights, or does it just represent trading on the price? There could be fragmented disclosure. There could be less transparent trading. And there's a big risk with the decentralized finance exemptions in things like the Clarity Act.
So you could own a tokenized stock, but you wouldn't have any of the protections that you would have if you were purchasing a stock with all of the protections that the SEC would provide.
It would depend, again, on what it meant. And again, that's why I think we need, some joint rulemaking and some coordination between the agencies. It could represent something where it's a pass-through, but it might not.
But it's open. And so just in the seconds I have left, how could the Clarity Act provide, I'm concerned that there's going to be sort of an incentive to move to one regulatory structure versus another, which is going to be the best for the company and not the best for the investor. Couldn't we address that from a policy perspective if we chose to?
Oh, absolutely we could. We would not have exemptions that encourage that kind of migration of activity. But that's what we're seeing right now in the Clarity Act and some of these other proposals.
Thank you very much.
Thank you.
Thank you. Senator Tuberville.
Thank you. Mr. Kim, you touched on this very briefly in your opening statement. The EU and UK are moving quickly to attract, blockchain-based innovation. What risks are we at in the United States? What are we going to face if we don't get more urgent about what's going on? I recently talked to some exchanges, and they're freaking out, basically, about, hey, we've got to do something, or we're going to have to move out of the country. What's your thoughts?
Thank you very much for your question, Senator. As I mentioned in my testimony, it is a global race to the top. So other jurisdictions have not been waiting for the U.S. to lead. You have the EU, Singapore, Japan, UK, all looking to attract technology resources I see blockchain development and digital assets as the plumbing and infrastructure for the second half of the 21st century. We need the U.S. to lead. That said, despite the progress in other jurisdictions, everyone is watching the U.S. now. They're seeing the Senate having passed Genius. They're seeing development of market structure bill, including in this committee. And even the UK is actually a really good example, Senator, where they had been taking a very modular, patient approach, but recently they announced an all-at-once approach. And I believe that there's an opportunity for the U.S. to cement its leadership and make sure this innovation stays here in the U.S., and that starts with a comprehensive legislative framework, as I discussed, Senator.
Thank you. Ms. Sexton, you want to follow up on that? You got anything on that about us dragging our feet?
Senator, I encourage this committee and the House to continue to work on legislation in this area. I think it's very important. I can tell you that from our perspective, we have, as I indicated, member firms already engaged in this activity, and to the extent that the CFTC would be provided with not only anti-fraud, but also regulatory oversight over digital commodities, I think it'd be very helpful as far as our own regulatory structure here.
Thank you, Mr. Behnam. The U.S. model of having two regulators, and we touched on this briefly, only works if they are a clear jurisdiction. You're very familiar with that. Can you talk about the need to clear up, this regulatory definition between the CFTC and the SEC?
Senator, thanks for the question. It's the first and most important step, because from that point, the two agencies will be able to really start to develop rules either distinctly and uniquely or in a joint fashion. But this is certainly a new asset that has a lot of characteristics that are similar to other assets, but also have a lot of characteristics that are novel and new and are going to require a different way of thinking about it. So I do think it's critically important. I also think, putting myself in my old shoes, it is important that the agencies get a bit of a steer from this committee and Congress, because there are lines that I think this committee and the Congress can draw to help the agencies start to really define the landscape of what tokens are securities and what tokens are commodities.
Thank you. I yield back.
Senator Lujan.
Thank you, Mr. Chairman, and thank you for holding this hearing and an opportunity to have this particular discussion about digital asset market structure. One of the concerns that I think has been brought up today and that many have had throughout the years is what happened with FTX, with Celsius, with a few others like Terra Luna, when there was a lot of concern and devastation. What I've appreciated most recently is everyone's willingness to come and have more conversations and say, no, there needs to be rules. And I appreciate the bipartisan nature of how this has been taking place as well. So just thank you so much for this particular conversation. Now, Mr. Massad, it's widely understood that Bitcoin is a commodity, not a security. Now, if I wanted to buy or trade a Bitcoin, a meme coin, or another commodity, I could log on to an exchange to do that. However, I could also buy and trade tokens that look much more like securities on the same platform right next to each other. So my question is, sir, what are some of the differences in the protections for consumers between a commodity like a meme coin versus a security like a stock?
Well, today they're huge because we don't have any regulation of this spot market for so-called digital commodities. That's what we need to put into place. But your question also really goes to the fact that, when we think about how to make that regime work, we're going to need things that are unusual for commodity markets. We're going to need disclosure rules as well as trading rules, as well as conflict rules and so forth. And that's why, again, I think we're going to have some coordination between the agencies.
So with that being said, is it reasonable for customers to be confused about the differences in their protections when they're listed next to one another? And does it increase the risk of something called rug pulls and pump and dump schemes, things of that nature?
Absolutely. And for example, under the Clarity Act, it's not even clear that those meme coins would be regulated. Now, I think they've recently put out a revision that maybe they would be, but we should have a framework where anything that's traded on these platforms is subject to the regulatory framework. They can't just list something else that's not, and then those rules have to be very clear so that customers aren't confused, and we should not have securities trading on the same platform.
So what are your thoughts, your expertise here with what Congress needs to do to protect consumers from fraudulent schemes while still allowing Americans to access and benefit from cryptocurrencies?
Well, again, we need to put in a good comprehensive framework. And, you know, the measures that are proposed so far have some of those elements, but not sufficient ones. I think they're too lax in a lot of the requirements. I think they, you know, don't address conflicts of interest sufficiently. I think they undermine securities laws by creating some exemptions from those laws. So, you know, it requires a comprehensive framework that will create investor protection standards that are comparable to what we have in the securities markets today.
Appreciate that. Mr. Behnam, one issue here is that the CFTC does not have clear regulatory authority over spot crypto markets. As past CFT chair, how would you protect consumers from fraud like those rug pulls that I just asked about and pump and dumps and meme coins where there are clear issuers, unlike other commodities like oil where there's no central issuer?
Senator, thanks for the question. I do think before we get to a point where you're deciding which agency has jurisdiction, if we can get lines drawn around definitions between commodities and securities, the whole premise and thesis behind the commodity tokens is that they're in fact maybe an issuer at some point in the evolution of the token, but when it's trading on a CFTC exchange, it's decentralized enough, or at some point where it's sufficiently decentralized where there's no central institution, group of individuals, or individual that is controlling or impacting the price of the asset. So if it's sufficiently decentralized, which works off of a lot of the legal precedent that is built around our securities laws and our commodities laws, you really wouldn't have that issue where you have individuals pulling off manipulative trading activities that could hurt investors.
So is it fair to say that the definition section of this legislation matters?
The definition section of any legislation this committee puts out is arguably the most important part of the legislation.
I appreciate that. And Mr. Chair, as my time expires, that's one of the issues that I and my staff raised during the markups with the Genius Act as well. And so I certainly hope that we can pay particular attention to the expertise from the staffs that we have around us and others coming in when we are looking at that definition section and just highlight your testimony today. Thank you for the time today, Mr. Chairman.
Thank you. Senator Justice.
Thank you, Mr. Chairman, Ranking Member. Thank all you guys for being here. Now, from my side, you know, I speak really plainly, okay? I would say just this. For God's sakes a living, do we not have enough smarts in the room to figure this out? I mean, when it really boils right down to it, do we not have the smarts in the room to figure it out? And I really believe we do. I really believe, hands down, too, that the potential, the upside potential is off the chart. And almost every country on the entire globe is scrambling like crazy to get a piece of the puzzle. You know, that's all there is to it. So why in the world are we so afraid of the dark? Why in the world are we so afraid of something that has the potential beyond belief, and do we not just figure it out? Now, let me just tell you just this, just two or three things. Today, Bitcoin is trading in its own little hemisphere, you know, and it's trading at 117,000. 45 days ago at the summit in Las Vegas, it was trading at 110,000. For all practical purposes, to make it real easy, 7% in 45 days. Now, lots and lots and lots of folks, whether we want them to or we don't want them to, lots of folks are saying, I want in. Now, with all that being said, what we need to do is we need to have a framework that allows innovation, period, do we not? But great big, B-U-T, with Jim Justice saying great big, we've got to have an enforcement arm that protects the consumer. Without any question, we've got to protect Toby and Edith. Now, I always call Toby and Edith the voters, but Toby and Edith want in, but they don't have any idea how to understand this. And you know what they do? They ask us to protect them. That's what they do. They don't ask us to do this and I say it, I've said this a bunch of times, but in my world, I can remember my dad saying, just count the egg-sucking cows. You don't need to count the legs and divide by 4 because they're moving their legs all the time and you can't ever figure out how many cows are in the field. Now, come on. We're really smart, and we're a country that ought to be leading the way in every way. What are we doing? Why are we so scared of the dark? Why are we so committed to counting the legs and dividing by 4? Listen, we passed genius. It's good. Now we have to some way acknowledge legitimacy, market structure. We have to have regulated clarity. We have to have clarity. We have got to protect Toby and Edith all the time, 100%. We've got to have real live enforcement that absolutely eliminates your bad actors. You're really smart people, super smart people. You've got some really smart people here on this committee. Maybe not me, but you've got some really smart people. I am here to tell you, we need to move and move now. Now, we're going to sit around and twiddle our thumbs, and a lot of people are going to have a leg up on us like we can't imagine. That's not doing Toby and Edith right. Toby and Edith want to play the game. They want to be involved. They want to be the next innovation. They ask us one simple thing: protect them. So I'm almost out of time. You got to go real fast. 10 seconds apiece and everything. Tell me, how can we pull it off? How can we pull the innovation off? How can we protect them? Real simple.
I believe that when the U.S. puts its mind to something, that we can accomplish great things. And I think, like you said, Senator, we do need a comprehensive legislative framework to allow for responsible innovation, a principles-based approach, while best protecting consumers. And I think now is the time to do so, Senator.
Senator, I think number one, just we have great capital markets and derivatives markets. Start with that as a foundation, and then we can figure it out.
I would say keep a couple principles in mind. Do no harm to the existing markets. Keep it relatively simple in the legislation, and rely on the expertise of our regulators. They do have expertise, and we should draw on it and not fight the last war when they weren't doing enough, perhaps, to customize rules.
Thank you.
Use the time-tested structure that's already been in place and has been in place for years. The CFTC regulates commodities. The SEC regulates securities. Use that structure. Congress gives some definitional support to what is a security, what is a commodity, and you go from there. It has worked in the past. It is simple. It will work again. There are SROs underneath that support the SEC and the CFTC in their work.
Thank you.
Senator, your description of the volatility of Bitcoin reminded me of other commodities like oil, gold, production crops that farmers that talk to you all the time are dealing with. The CFTC is a natural home for these types of commodities that are dealing with volatility, the fact that they can trade the derivatives to help to hedge that volatility. My advice to this committee is to give exclusive jurisdiction over digital commodities to this agency, and to give digital securities to the SEC, and to give clear lines of jurisdiction to both agencies.
Well, thank all of you, and thank you, Mr. Chairman, because you've led the charge and everything, and I'm right with you, sir.
Thank you. Senator Durbin.
Thank you, Mr. Chairman. We've said over and over again, we have securities and commodities. We've got to make careful definition, but I think there's more to the story. In the Clarity Act, which will receive a vote in the House this week, they create a loophole for crypto tokens known as collectibles. That means those crypto tokens won't have to register with financial regulators and would benefit from a lighter touch regime. In fact, collectibles aren't even considered digital commodities in the bill and are basically exempt from most requirements. When Coinbase, one of the largest crypto exchanges, went to court with the SEC, Coinbase I believe he's a member of your organization, Mr. Kim. Coinbase argued that the tokens listed in the SEC's complaint were neither securities nor commodities. Coinbase's lawyer argued in court these tokens were like Beanie Babies, meaning just trading collectibles. But these collectibles can involve multi-millions of dollars. Just ask President Donald Trump, who listed his own meme coin on exchanges like Coinbase and Kraken, two exchanges that are part of the Crypto Council for Innovation. President Trump's meme coin has no real use and trades its values basically on popularity and hype, just like a Beanie Baby. But that did not stop President Trump from auctioning off his meme coin and giving top investors, get this, access to a face-to-face dinner with the President of the United States. Not only did President Trump make $315 million in fees by selling his meme coin, get this now too, 764,000 unique wallets lost money to the president's scheme. Talk about Toby and Edith. All the while, crypto exchanges like Coinbase and Kraken claimed they had a robust listing process and continued to perform due diligence on and on. So, Mr. Massad, let's start with you. What concerns, if any, do you have about a huge exception for collectibles in any crypto market structure legislation, number one? And number two, you talked about a black eye to the industry of this transaction involving the president. I think it's more than a black eye. I think it's evidence of corruption. And the question, the bottom line as far as I'm concerned is, what does the industry do if they're afraid of the president when it comes to regulation?
Thank you for the question, Senator. First, on the collectibles, I agree with you. The Clarity Act does exclude those as commodities, and I think the rule should be that digital commodity exchanges can't trade anything unless they're covered by these rules. And what I would suggest to you, Senator, is why don't you write all the big platforms, Coinbase, Kraken, Gemini, if it's so clear, if the Clarity Act is so clear as to what's a digital commodity, ask them to tell you of the hundreds of things they list, which ones are digital commodities, and see what answers you get.
Mr. Sexton, what do you think?
With regard to those types of tokens, coins, I could tell you that we approach it from a slightly different angle, and that is we regulate the conflicts that may be embedded within our members.
I'll have to ask you to make a brief conclusion to your answer so I can ask one other question.
Go ahead.
In 2024, the FBI reported that Americans lost $16.6 billion to crypto schemes, 33% increase over the previous year. The type of scam I'm concerned about involves a machine called a crypto ATM. Mr. Sexton, do you know how many we have in our state of crypto ATM machines?
I could tell you, I don't know the exact number, Senator, but quite a few.
I can tell you it's 1,600. So what happens with the crypto ATM? They put them in grocery stores and shops. They're basically the way they victimize senior citizens and people in minority communities. Once a victim places their hard-earned cash in one of these machines, it disappears into a criminal's wallet, almost impossible to get back. Here's how it works. Scammers call an unsuspecting victim, tell them they owe taxes to the IRS or a penalty for failure to appear for jury duty. Not to worry, they can pay it off at a crypto ATM. They direct them to the nearest crypto ATM. These people put their life savings, in some instances, into the criminal's digital wallet. In 2024 alone, scammers stole nearly $250 million from Americans, and the stories are heartbreaking. This industry ought to wake up to this reality. There's a misuse of one of their operative machines to scam people over and over again with huge sums of money. Want to be known as a reputable industry? Do something reputable like protecting consumers. About 15 states have done it. All of them should, and we should put something in the federal bill. When the Genius Act came before the Congress, I wanted to offer this amendment. No amendments. Take it or leave it on the Genius bill. well, if we have a second chance, whether it was clarity or genius returning, let's at least think about the consumers for a few minutes. Thanks, Mr. Chairman.
Thank you, Senator Booker.
I'm grateful. I think if anything we're hearing in this committee is the urgency for a market structure bill that provides the appropriate regulation. I want to jump in right away, though. Mr. Massad, you said something that to me maybe was an understatement. I never imagined in my life I would see the President of the United States create a digital asset that is open to being purchased, a meme coin that could be purchased by anybody, anywhere, from our adversaries, our rivals, from people trying to curry favor with the United States, from people who are looking for military deals, and to literally sell seats to a dinner at the White House, at the Americans' one of the more sacred civic spaces. To me, this amounts to a level of galling corruption never, ever before imagined that could happen in our country, and we're normalizing it. It is corrupt, it is dangerous, it is an attack on our democracy, it's a violation of the Emoluments Clause, and it is undermining this industry as a whole. Would you agree with me that my language is probably perhaps more appropriate?
I would totally agree with you, and I've said similar things. The meme coins are a perfect bribery tool because they're out there. Someone can buy them and therefore, provide essentially money to the president, yet still claim, well, I'm just speculating on a meme coin.
Would you agree that the way our Constitution was designed, the legislative branch is supposed to provide checks and balances and oversight? And the fact that the United States Senate, has not had one oversight hearing of this corruption is a surrendering of our obligations and duties under the Constitution.
It's shocking to me. I mean, he's making billions of dollars, not just from the meme coin, but from his own stable coin. Even the meme coins have been called by the creator of Ethereum. The creator of Ethereum has called them a bribery tool.
I think it's appalling that Congress has laid down. I think it is extraordinarily dangerous. And I
would agree.
am beyond frustrated that we are normalizing this level of corruption in America and have the most corrupt president imaginable who is making hundreds and hundreds of millions, if not billions of dollars, profiting off of the presidency at the very national security risk that it proposes to our country, when he can make decisions that affect truly the safety and security of our country, as many of these countries are trying to curry favor and have deals. That doesn't even begin to mention the Trump hotels and all the other things that he is doing that truly undermine any idea of what it means to operate in the presidency with integrity. I want to jump really quick, Mr. Behnam, because I'm very deeply engaged and involved in trying to make sure that we land something that could deal with a lot of the challenges. The one thing that hasn't been discussed, as you and I talked about this ad nauseum, is the CFTC's capacity to regulate this area. Right now, we have seen budget requests for a 2.9% decrease in funds from its 2024 request and a 5.1% decrease in personnel, which is on top of cuts made earlier this year by DOGE that threatens the CFTC's ability to oversee the $120 trillion equity and debt markets it's already responsible for, without even adding the growing crypto market into the equation as is envisioned. The House's Clarity Act would expand the CFTC's jurisdiction without a single additional dollar. It will create chaos for retail consumers in our markets, I believe both crypto and in traditional finance. Am I right to be outraged that this is how we're starting without understanding the resources that would be necessary to do what a lot of us are envisioning?
Senator, short answer is yes. I mean, the number one priority, if we're going to authorize new authority for an agency, the CFTC here, is funding and resources so that it can execute those responsibilities.
Well, I will tell you this right now. I want to lean in a bipartisan way and craft market regulation. But this is what I see right now. I see senators and congresspeople trading stocks and bonds people who are involved in the crypto world. I see, again, I have legislation with a number of other senators that really say very clearly that we should be doing everything we can as a matter of integrity to stop corruption, that we should introduce and pass the End Crypto Corruption Act, which would make sure the president, vice president, senior executive branch members of Congress and their immediate families, that stops them from financially benefiting from issuing, endorsing, or sponsoring crypto assets such as meme coins. So we have this air of corruption that undermines the integrity of Congress and the presidency at a level of corruption we have never seen before. And the very regulatory bodies that should be overseeing these massive markets is being starved of resources to even do the jobs they're doing right now. Any serious effort to engage in the kind of a market structure bill we are having without putting the resources that we've discussed in the past. In the bill that we had in the last Congress, a bipartisan bill, we had a way of addressing this. And so there are a lot of structural problems I have right now, and the level and possibility of corruption, of scams, of people that could get hurt if we don't do this right is stunning to me, not to mention the very foundations of our democratic system so that we don't become some corrupt banana republic where presidents and senators and congresspeople can bilk the American people by bending the rules, corrupting the rules for their own benefit. We have got to do things different.
Thank you. Senator Bennett.
Thank you, Mr. Chairman. Thank you for holding this hearing. Thank you to the witnesses for being here. Mr. Massad, President Trump earned about $57 million from his stake in World Liberty Financial last year, according to the most recent disclosure forms. In the last few months, World Liberty Financial launched a stablecoin, which was used by an Abu Dhabi-backed investment company for a $2 billion investment in finance. Just before the inauguration, President Trump issued a meme coin, which surged in price in May. President Trump hosted a dinner, as has been said, for the 220 biggest holders of his Trump coin, further juicing the value of that coin. About 80% of the tokens are held by Trump-affiliated entities. I don't think we should have to wonder if the President of the United States is favoring the interests of a foreign nation or a private crypto exchange like Binance, because he stands to personally profit. And that's why last month I took over the Senate floor to directly add an amendment to a piece of crypto legislation that we were considering, the so-called Genius Act, which was on the floor of the Senate. My amendment, the only Democratic amendment that was pending, would have prevented the President and the Vice President from issuing stablecoins. I would be surprised to know that there are a smaller percentage than 95% of the American people who would not have agreed with my amendment. And yet it was thrown out of the bill, and Democrats and Republicans voted for that bill without demanding that the President and the Vice President and members of Congress not issue these currencies. Today's conversation does not only address stablecoins, but the entire ecosystem of digital assets, and it is really important for us to get it right. I believe really strongly that and I believe, as again, 95% of the American people, if not 98% of the American people, would agree that the President, the Vice President, a member of Congress, high-ranking official of our government should not be in the business of issuing any cryptocurrency. Mr. Massad, as a former federal regulator, should federal elected officials be prohibited from issuing or endorsing digital assets while they're in office?
Absolutely, Senator.
And what kind of market manipulation might result from that? We've had some discussions today about why these are like other commodities like wheat or like, well, how is it maybe different in this case?
The meme coins are a perfect example. They've been called a classic pump and dump scheme by a number of commentators. They were issued, people rushed to buy them. He made a lot of money off of that, and then the price fell, and a lot of people then had losses. And, you know, he's investing in not just a stable coin. They're now doing things with Bitcoin mining and other business ventures. So I agree with you totally. You should be limited. You should be prohibited from doing those things and required to divest.
What can you imagine any benefit to the American people of allowing the president or vice president to
None.
speculate in this currency?
None whatsoever, Senator.
And yet, the U.S. Senate has passed a bill that allows them to do it. And I offered an amendment. I had an amendment pending that said the president or vice president shouldn't do it. I would be shocked if I lived long enough to have an amendment pending that would be more popular with the American people than the one that I had in there. And yet, the Senate threw it out before they blithely passed the legislation.
We've never imagined that a president would do these kinds of things, and therefore, we don't have the rules in place to prevent it, but we need them now.
I would think the industry would want these rules in place.
I think they do. They're just afraid to say it.
Why are they afraid to say it?
Because they're afraid that it might hurt their business interest. I've had so many people in the crypto industry come up and tell me that.
Well, we're going to have to figure out as the elected leadership of this nation to do better than that somehow.
I would agree, Senator. If you don't do it, who will?
Exactly. Mr. Chairman, thank you very much. I'll submit my other questions for the record, but I think you've shed some important light here. Thank you.
Thank you, Senator Bennett. Senator Schiff.
Thank you, Mr. Chairman, and thank you all for being here to testify. I think it's very important that we have good, strong, and sound regulation of this whole industry to protect consumers, to make sure that there are clear and understandable rules of the road, that there's some certainty for investors, for consumers, that there are protections in case of bankruptcy or fraud. I'm also deeply concerned, as Senator Bennett just alluded to the prospect of high administration officials manipulating digital currencies or their ability to influence enforcement actions, and be very interested in your thoughts about how to address these conflicts, potential and real conflicts of interest, when you have people who are in positions of dominant influence like the president or others issuing, endorsing, sponsoring their own digital currencies, how we can ensure that we either prohibit such actions completely or that we make sure that people who are engaging them are subject to laws against market manipulation and self-dealing. So let me start, if I can, Mr. Behnam, good to see you again. By asking you, I know you've spoken directly about the need to maintain public confidence and integrity in these markets. Do you think public officials that have any kind of supervisory or influential role should be permitted to issue their own currencies or endorse their own currencies, or would it be the most basic and fundamental provision that should simply be banned?
Senator, thanks for the question. Short answer is yes, it should be banned. And I'll say, as a former regulator, just 5 or 6 months removed, for 7 years at the commission, I took that responsibility very seriously. The weight of the responsibility as a regulator over markets and ensuring there was no conflict of interest or exposure that me or my family had to the markets I regulated.
And does anyone testifying here today think it's okay, good practice, nothing to see here, for high administration officials who have influence over these markets to be able to issue or promote their own personal stable coins, digital currencies of any kind?
Just to be clear, Senator, I agree that it should be banned, should be prohibited.
And I would go further than the administration officials. I would say ban all those actions from any members of the House or Senate. Anyone disagree with that proposition?
Senator, I know this has been a discussion among policymakers. I just wanted to note that for myself, this is admittedly outside my area of expertise, and I see this as a decision for Congress. I just wanted to say that respectfully, Senator.
Well, I appreciate that, and I hope we will make that very decision, because I think it's vitally important that we regulate this area. I think the current unregulated or regulation by litigation posture we're in is undesirable for everyone. Doesn't protect consumers, doesn't help legitimate actors in the industry, doesn't provide any certainty or ability to plan or predict or invest. At the same time, the most basic protections we might put in place to protect consumers will be undermined if those that can influence the whole market are in business themselves and able to enrich themselves. But let me move on from the problems that have been documented by the first family's involvement in this business. In what other respects, and I open this up to any of our participants, can we help ensure that consumers are protected? Obviously, there have been some catastrophic failures of companies in this space engaged in fraud. What's the best way to protect consumers so that in the event of a catastrophic failure, they're protected?
Maybe I'll start off, but I think the first is acting. I think the Congress needs to act to fill this regulatory gap. This committee is starting that process of doing that. And we're going to have to, as was mentioned, make sure that we have strong, clear lines between the CFTC and the SEC on how you think the jurisdiction should go. But importantly, each agency brings unique customer protections and important market integrity issues that are going to help fix the problems that you're identifying. So I think you're preaching to the choir here. Everybody on this panel wants to fill this gap right now, and it's up to Congress to act quickly.
Senator, I'll add, in December 22, I testified before this committee shortly after FTX failed. And FTX had one entity that was registered with the CFTC. It had a number of entities globally, over 125. And I said to this committee, of the 125 plus entities, about two or three, two I think in Asia and one here in the US, Ledger X, which was registered and regulated by the CFTC, was viable, well-managed, and had value after that bankruptcy. So after that fantastic bankruptcy, this entity that had regulation, that had supervision, that had oversight, had a future because of regulation. And that's the point that I think is most important for this committee to take away. As much as there's many issues to resolve and discuss and deliberate, regulation works, and it ultimately will protect customers.
I would agree with what former Chair Behnam said, and I think the other entity of the FTX family was one in Japan that was also subject to pretty good regulation.
If I may, very briefly, Senator, I agree with the need to address this regulatory gap, as I mentioned, by providing the CFTC with comprehensive oversight over digital commodities. It's just taking us on a slightly different angle. I know for CCI, a lot of what we do is consumer education, Senator. So we would love to be a resource to you in your office. We have different workshops, making sure that there's scam awareness campaigns. A lot of our members do that as well, because even though we're here to talk about the need for market structure, there is a need to just educate broader consumers about the fraud and scam out there, and CCI is committed to coming up with policy solutions, Senator.
Last, to keep it short, Senator, and thank you for the question. Agree with all my panelists. Look, this isn't difficult. There are long-standing safeguards in place to protect retail customers. The CFTC and NFA have adopted them over the years with regard to derivatives. Those should be applied also to the digital commodity markets to protect retail customers, safeguarding customer funds, market practice rules, business conduct rules, disclosures. There's a whole litany of them. And I think that it's extremely important that this committee look to those time-tested requirements and safeguards, and they go a long way to accomplishing what we're trying to do, and that's protect retail customers with regard to digital commodities.
Thank you. Thank you, Chairman.
Thank you. Senator Klobuchar.
Thank you very much, Mr. Chairman. I just have a few questions as promised at the end. And I hope that the world watching here sees that we're not going to be rolled here on this bill, on the Clarity Act, and that you have a lot of members who want to see a piece of legislation that truly protects consumers, people who have worked with the industry in the past on our side, that are interested in working on this, but really want to see some serious changes and are concerned both about the conflicts issue, are concerned, as Senator Booker, I'm going to ask my first question on this, about the funding issue of how the CFTC should do this, and are certainly concerned about the consumer welfare and what safeguards should be in place. And there's not loopholes that could, drive a truck through here. So that's kind of where it's not consensus. We have members with different views on this, but I do think that people should take home from this that we are going to want to see some major changes. So, Mr. Behnam, you previously called for additional funding and staff for the CFTC to write rules for and oversee these markets. How important is it that Congress provide for durable, sufficient funding when it comes to these brand-new markets? And I think just to combine my questions then with you, Mr. Lukken, one of the concerns is we've got derivative markets, we've got an economy that is on a roller coaster right now because of tariffs and other things. We don't want to disadvantage existing markets and market participants in how we do this. So it's a little bit the same question, but
Senator, very
go ahead.
quickly, thank you for the question.
Mhm.
Short answer, it is an absolute priority. If you authorize a regulatory program but don't have the funding, it's just, there's no teeth there. I did a number of estimates internally when I was chair. We came up with about $130 million over the first few years to staff up both on the tech side and the personnel side. And to your last point, and I think this should resonate with everyone on the panel and on the committee, I cannot tell you how much personnel time was taken in the last few years of my chairmanship on crypto-related matters. And I don't mean that in a negative way, but it's zero sum. When you have those people working on crypto matters, which are novel, unique, and don't have legal precedent, it leaves them away from traditional markets, which I think we all agree are the core of what the CFTC does and the core of what this committee cares about on the ag side, the energy side, the metals, and financials.
Okay, thanks. And then Mr. Lukken.
And the question is around the funding and
Just
impact?
it's pretty much funding, because what's going to happen if resources are pulled too thin because of this major challenge coming in?
Sure.
In a good and bad way, but something that was going to have to be accomplished. And then you have these other things going on that you've always done,
Right.
they have always done at the CFTC.
Right. No, I think the agency certainly deserves full funding, and especially if they're taking on the new responsibility of digital commodities, they're going to need more funding to make sure that they can administer the act. You know, if that's something that has traditionally been through an appropriations process. I think the Clarity Act gives the ability a transitional fee that happens for 4 years. That, to me, makes some sense. I think once you start, if you start to put in a permanent tax on the industry, the concern is that you may start to impact hedgers, the people who are trying to utilize the markets, and taxing them instead of appropriating that through the appropriations process. So I do have concerns with putting in a transaction tax permanently. I think it's better suited through the appropriations process.
Mr. Kim, I'm just only smiling. I'm not going to get into the rescissions and what this means to many of us when we look at that process, what's before us now, and if we can ever trust it. Mr. Kim, Senator Marshall was talking about the need to make sure we protect against terrorist use of these commodities. I thought that was a good line of questioning, and I just have one thing to add. Are digital commodity market participant technologically capable of complying with these financial laws? Should Congress tailor the laws in any ways to account for unique features of these markets or this technology?
Thank you, Senator. I think the U.S. already has a robust AML-CFT program through FinCEN, as I mentioned earlier. That said, I believe it's appropriate for the CFTC to be the regulator for digital commodities. And once that framework is established, Senator, I think there could be additional protections as need be. But what's been missing, as I mentioned, is that regulatory gap right now where the CFTC does not have that statutory authority to take a look at centralized intermediaries. And my testimony has been about the need to address that gap to ensure U.S. leadership, Senator.
Mm-hmm. So some mention has been made of the collapse of firms like MF Global and FTX, and it truly revealed how customer assets can evaporate when we don't have the adequate safeguards. In both cases, customer funds were commingled and ultimately lost in cascading failures that shook public confidence in financial markets. Start with you, Mr. Behnam. What mechanisms would best guarantee that these assets are safe, even if prices of collateralized digital assets collapse? And how should Congress address these practices where firms reuse customer assets for their own purposes?
Thanks, Senator. Just very briefly, it really goes to the core principles and the rules that the CFTC applies in regulated institutions. MF Global was unique in the sense that it was a regulated entity, and those funds were commingled outside of, in violation of the segregation rules. Some changes were made afterwards, but segregation rules, I think everyone would agree with on this panel, are sacrosanct to the CFTC, making sure customer money is protected and prioritized among house money and other customer money. And I think if you replicate what rules around customer seg are used for traditional CFTC markets in the digital asset market, we will be able to accomplish our goals around protecting customer money in digital assets.
Okay, thanks. Another question. We know that DeFi, the decentralized finance, raises novel regulatory challenges. So how should Congress approach decentralized finance platforms in regulatory frameworks?
Thanks, Senator. We had, at the CFTC when I was chair, we had a couple enforcement actions against DeFi protocols. And I do think there should be and needs to be a unique look at how DeFi platforms function relative to centralized platforms. But I am a firm believer that there needs to be some mechanism of regulation and oversight. DeFi platforms cannot live in a regulatory vacuum. There has to be some intersection with a regulator and a decentralized platform in order to have effective regulation. Otherwise, there will be a race to the bottom, essentially a race to DeFi to circumvent regulations.
Mr. Sexton, does the Clarity Act's DeFi exception, the exemption that's in there, concern you at all? Is it too broad?
Senator, thank you. I know that there are concerns expressed about the DeFi exception in the Clarity Act. I believe that Congress should give some instruction to the CFTC as to how to deal with these platforms going forward in legislation. And also, I think that the CFTC and the SEC should carefully examine together DeFi protocols and determine, as Chair Behnam just indicated, how best to look at these protocols in the future and possibly come up with some type of regulatory oversight over them.
Okay. Do you want to add anything, Mr. Massad?
I think the DeFi exemption that's in the Clarity Act is one of its worst features. I think the first thing is we have to define what we mean. People use the term DeFi. It's not just an autonomous protocol. They're typically talking about, situations where you have a business that's actually the front end of that or managing that. So there's lots of touch points for regulation. DeFi should not get a regulatory pass. And we may need different rules, but we need to achieve the same regulatory objectives. One simple way to think about this is if we had a protocol that was for the Treasury market, and that suddenly became the main way Treasuries were traded, we wouldn't say, oh, well, we don't need to regulate it. We don't need to worry about it. So I think the key things are define what we mean, look at the touch points for regulation, because there are typically centralized actors acting in that space, and develop different rules if we need them, but achieve the same regulatory objectives.
Okay. Mr. Behnam, the collapse, again, of offshore exchanges underscored how quickly gaps in the international monetary regulatory frameworks can put U.S. customers at risk, with trading activity flowing across borders outside the reach of domestic agencies. The challenge, in addition to the other ones we laid out here, becomes ensuring robust protections for customer funds that are in this truly international market. How can the U.S. ensure that customer funds are protected in a global market where trading often occurs on offshore exchanges beyond U.S. oversight?
Thanks, Senator. We have been a bit behind other regulators across the globe, and I think that's created arbitrage opportunities. Also, these international platforms who don't feel like they have a path to registration in the U.S. for a variety of reasons are circumventing essentially what are called VPNs, or virtual private networks, to get access to U.S. customers. I firmly believe that as the committee moves forward and the Congress moves forward with a market structure bill, if drafted correctly and comprehensively, this will bring the market within the regulatory fold, and that will provide the customers that you're talking about the protections that they deserve and that we need to have on a sort of outcomes basis, as Chairman Massad said. So regulation, as we take steps, will resolve these issues in part and hopefully comprehensively with other global regulators.
Okay, thank you. I'm going to have to go to something else. I see Senator Warnock is here. I want to thank you, Mr. Chairman, for having this sort of bipartisan hearing, and so everyone could listen to the witnesses' ideas, and we look forward to working with you and with the rest of the committee going forward. So thank you very much, and consider my last comments my closing.
Very good, thank you. Senator Warnock.
Thank you, Chair Bozeman. Last Congress, Mr. Behnam, Congress, when we were considering legislation that would provide the CFTC with the authority to regulate the spot market for digital commodities, you testified before this committee that the CFTC would need $120 million to properly staff up and prepare to supervise and regulate an entirely new industry. Do you still agree with your previous testimony, yes or no?
Yes.
The President's nominee to replace you, Mr. Brian Kentons, could not confirm that number, but he did indicate in his testimony before this committee that more funds would be needed to implement the new authorities for the CFTC. Chair Behnam, to your knowledge, has the Trump administration requested additional funding or additional staffing at our financial regulators to properly support additional regulatory responsibilities?
No, it has not.
So in 6 months, we have seen hiring freezes, we've seen staff reductions at the SEC, at the FDIC, at the OCC, all while refusing to nominate Democratic commissioners for historically bipartisan boards like the CFTC. Chair Behnam, last year you were consistent that new funding would be needed for new staff, staff training, and technological upgrades. So let's say a new crypto market structure bill that gives the CFTC new regulatory responsibilities is signed into law. Could you share what are the risks associated with Congress failing to provide the CFTC with sufficient resources to properly supervise the digital asset industry?
Thanks, Senator. In short, the answer is without the tools, which become the resources behind the authorization for the program becomes essentially useless. There's obviously a lot of talented staff at the CFTC, and I know they will work hard to implement the program, but we absolutely need resources at the agency to properly implement the program.
Absolutely, I agree with that, and clearly investors of all sizes, if we're going to make create a situation where capital markets can thrive, investors of all sizes, we need to have confidence that regulators are upholding the law, protecting consumers, that they have the capacity to do so. And so I look forward to working with my Republican colleagues to ensure that the CFTC is properly resourced. Regulatory certainty for the digital asset industry limits unnecessary risk, and it can help prevent the collapse of another cryptocurrency exchange firm. One thinks of FTX a few years ago. But I'm concerned that today, a handful of centralized firms have come to control multiple stages of the trading process. And all of that concentrates the risk, creates conflicts of interest in my mind. Mr. Massad, good to see you again. Is it routine for centralized exchanges to also serve as the custodian of customer funds and be responsible for listing, trading, clearing, and settling trades? Is this typically what we see?
Yes, it is, and they even have more vertical integration than that. And of course, most trading is through those intermediaries, not on-chain.
And what sorts of risks and inefficiencies or conflicts of interest may exist when exchanges are vertically integrated like this?
There's all sorts of conflicts that can arise. For example, today, these trading platforms can do their own proprietary trading, so they can front-run customer orders or misuse customer information. They can have interest in the tokens that they list. That's not prohibited either. They can have other business ventures. And with respect to custody, they can be charging separate fees and may not adhere to good custody rules. And even the Clarity Act doesn't even require these platforms to hold the Bitcoin that they say their customers own. It doesn't require that.
So this vertical integration, creating additional unnecessary risks for customers. We saw this with FTX, with customers being unable to access their money months after the collapse of FTX. And I'm especially concerned that customers may not be getting the best prices on trades, that they may be paying higher fees, and more consolidation will lead to less competition in the
Yep.
market and create more systemic risk, like we saw in the case of FTX. Mr. Massad, what provisions do you see in a Senate bill to limit the risk that large centralized firms may have on the digital asset market?
Sure. We need a comprehensive regulatory framework that prohibits these kinds of conflicts of interest, so no proprietary trading, no interest in the tokens they list, no other business ventures that can pose conflicts. We need to impose best execution requirements on brokers. We need to impose strict custody rules and, either consider separate custodians or at least have rules that ensure that they really are holding the Bitcoin that they claim or the other assets that they claim their customers own, and they're segregating it properly, and they're not charging fees for that.
Thank you so very much for your testimony. I look forward to working with my Republican colleagues to create a Senate bill that contains strong conflict of interest language so we can safeguard the financial system and protect consumers. Thank you very much, Mr. Chairman.
Thank you, Senator Warnock. And with that, thank you again to all of our witnesses and our committee members for their participation in today's important hearing. The record will remain open for 5 business days. Today's hearing is now adjourned.